Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is June 1st, and we are going to take a look at Tesla's stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not a financial advisor, so please do your own research and make your own decisions. So Tesla down a little bit today, down $17.89, down 2.36%, closed at 740.37. Post-market, we are down by another 35 cents. Yep. This is a very interesting thing that is happening. So yesterday, we came out of these two downward channels, this one right here and this one right here. And we came out of them and we came back into one of them. We came back into the main one, which is this big one here that started November 4th. So we came back into this one here. One thing that's not helping us is that we don't have stochastic over 60 yet on the daily chart. So without stochastic over 60, a stock really has a hard time pulling a wave for good. This is what's happening right here. But we see that we are at least outside of this second downward channel here. So we are just outside of it here. Let's go see the 1 hour chart to understand how this happened during the day. So first hour of the day, we opened at 755, which is a decent number. We went quite high. We went as high as 771. So this was looking good. But then on this first hour, we caved and came back into this main downward channel right here. So on the first hour, our stochastic on the 1 hour chart was down to 64. So then the second hour, we pretty much went sideways and that gave us a stochastic of 60. So we were barely there and we could have recovered, but this is not what happened really. And then third hour, we really came down and look at this perfection here, how we touched the second downward channel. The second downward channel, we touched it perfectly for the 11:30 candle. Perfectly touched. And now what's happening is that we are bouncing on that. And we are also bouncing on our main channel. So see here, we are bouncing here and coming down. And now we are losing stochastic a little bit more, so stochastic at 33.96. I drew this new downward channel here. Basically, we seem to be entering into this double resistance for this channel right here. Basically, this seems to be happening right here. So we seem to be into this downtrend here. If you entered at around 66 AD or something, you are still in the money. And now that we lost stochastic on the 1 hour chart, there's some money that can be made here on the shorting side. In terms of the short-term long side, this is pretty much over. If you want to look at the longer term long side, then this is a little bit problematic. So you should go on the daily chart, and the daily chart is not yet ready. This is how I am playing it, at least right now. So I took profit here. I took profit here when we came outside of this support right here, and we started to lose stochastic. So I lost faith a little bit and got out. Coming back to the daily chart. So on the daily chart, is caving in back a little bit at 35. We have several support that we can retest. The biggest one is at 695.46, and everything else is still in the red. Impressive move in terms of its speed and its strength, but now we are in the pulling back mode, and let's see until where we start pulling back. And if you want to really make sure that you trade the pulling back, you can always switch to the 1 hour chart. The stock might do something like this, and at some point, if it decides to do something like this, you will see the stochastic go over 60, and then you can decide to re-enter at that point. So that's a perfectly valid way of doing this. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. you can click on my TradingView affiliate link or my other affiliate links. I'm going to wish you a great evening. We are going to talk tomorrow and I'm going to tell you à la prochaine.